I am kind of pissed off right now because I have to be recording this thing for a second time because you could not have seen my whatever, you know, my cursor on the screen for some reason. But you asked me to show you how I basically trade. So I'm not a good talker or anything like that. I stumble over my words sometime a lot, but I'm gonna try my best to help you out, help out the community and whatnot. I trade a little bit different from our girl. Um, so our mentor, I look at her as a mentor. She's awesome, isn't she? But I trade a little bit different from her. I'm starting to actually implement a bit more of her strategy to my own thing in terms of if I miss an entry because my entry are probably, a little bit more aggressive than her entries, I guess. But I guess she would have entered on the break of if she was taking the straight, she would have probably entered on the break of either this area right here or this area right here. All right, but that is not me really. How I trade is right. Okay, so I'm gonna start out. So then I noticed that price was moving up in an uptrend. All right, okay, and then price came and formed, you know, a little supply zone right there. Okay, so what happened is I was looking at this and I was noticing price was, you know, coming into this area right here. It bounced out, came into this area right here, bounced out again, came up right here and manipulated this area right here of, you know, this liquidity area right here. So what happened is the theory is price comes and plays people placing um their stop losses, they're selling off this market because they expect price to fall down at this point, but that doesn't happen immediately. Okay, so this move right up right here came and and took out all the orders that was laying up above this area right here. All right, and so I noticed that I actually got involved in the market right here on this candle right here. Okay, because what happened is I was noticing this price action right here, this candle action right here. You have you have tweezer tops right here happening. This isn't the classic example of tweezer tops, but when you see something like this with gold at an area like this, it's a significant thing most of the time. So I was noticing that, and so I took an entry at the pullback to this area right here. Okay, we have the green line drawn, and I just noticed price wasn't moving away from the area as quickly as it was supposed to move away from the area. So I basically closed out the order right at this candle right here and said I would wait for another opportunity if that opportunity came along. But however, that's not important right now. So note, okay, so we're in this zone, and what I'm noticing in this zone right here, okay, we have this M formation starting to happen right here. Okay, at this point right here, I'm thinking that, okay, I got stopped out, this is pushing up. i've noticed that this I'm noticing that this area on the awesome oscillator is not getting any higher than this area right here. That is called a divergence. At this point right here, this is still lower, even though price itself is pushing up higher. Okay, it's still, you know, lower. So then price basically pushed up and took out all the orders around this area right here. You just completely wiped out anybody who had any stop loss there. So at this point, you have people that are starting to buy in the market. Okay, they're starting to buy in the market. All right. So the theory is that the composite man or the market makers are buying at this point to basically um put more take out all the stop losses that are up here, and put more people that that have maybe buy buy stops in the market, put more people in, and then take them out immediately with this push down right here. So I noticed this right here, right? This little thing right here, okay? So I noticed this was happening. So I said to myself, okay, if this closes right here, then this makes this an institutional candle, institute or an order block. Some people say there's no such thing as an institutional candle. I just use the theory of it. Okay, as well, we were having all these different kind of wiki movements at right here. So I was noticing price was pushing down. Okay, I was noticing price was pushing down at this area. Okay, now I was going to be a bit more aggressive with this entry. Normally I would wait until price comes to 50% of the candle and then enter, but because we kind of had that kind of same action happening here, I figured that maybe price would not want to wait for me to get my entry, so I took an aggressive entry here. So we had a couple of confluences. Okay, we had a divergence again. We have divergence. We have price coming up here. Okay, making a high and a higher high right here. Okay, and but then on the indicator down here, you have price making a high here, but then a lower high right there. I'm sure you know all that. Okay, then you have this bearish engulfing. Um, you have this bearish engulfing candle right here. Okay, price closed. That was a candle confirmation. But then you had this tweezer top candle right here. Now, if you look into tweezer top candles, they are actually one of the most powerful candlestick patterns out there, even more powerful than bearish engulfing. Bearish engulfing is alright, but there are a lot of times when bearish engulfing fails. Okay, look at this. With this bearish engulfing candle right at this point right here, you know, you would expect this to continue pushing and blowing all the way up, and it did, but you didn't get the kind of move that I didn't get the kind of move that I look for. So I consider this bearish engulfing candle here a failure. Okay, because I would not have been feeling comfortable holding this for so long, and there was no significant movement at this point in price. Okay, so then, okay, so you have the tweezer top. I entered here. Okay, my first point of interest in terms of taking profit would be this low right here. Okay, reason being, okay, this could be considered something they call an order block. Okay, a mini order block if you want to call it, or something like that, right? So they have price push down and then immediately push up, which means that the market makers are probably trying to take out whatever kind of liquidity there is in this area right there. Okay, so that's why I had this area my first. My second one was this right here because this is itself, this could be considered this area right here, okay, could be considered an order block as well, simply because this was the last move down before a significant push up. It was a halt in the market. Yes, it wasn't a significant move down, but those areas are important when it comes to be able to point out place where price might reverse, and sometimes price continue going down, sometimes price reverse. Okay, so that is basically it. So first of all, what we got to look for is we got to look for our confluences. We had about, I don't know, five also confluences. We had the divergence, we had a supply zone, we have multiple manipulations of that supply zone. We okay, we had an extended M formation, we had our tweezer tops We had our tweezer tops. We had our bullish bullish engulfing candle. So, having more confluences when you're taking trades is actually kind of very important because, if you just see one thing, if you just randomly take a trade and you don't know what you're doing in terms of, what is stacking in your favor versus what is stacking against you, you could really fuck yourself up. Like, you could honestly just mess yourself up. All right. So that is it. I guess maybe from time to time I'll just post one of my old trades just to show you all what I'm thinking. What I'm also going to get into right now is I'm going to mark up my charts and post that as well in the chat. Anyway, have a good evening.